But I want to know, how is MicroStrategy buying his Bitcoin? I assume you're not buying it from Binance or KuCoin. How are you guys adding, able to get so much supply?
We're a public company. So if a public company wants to acquire a crypto asset, we need to find a counterparty, like an exchange that we can vet, that we feel secure with. And normally the checklist would be, are they licensed in the United States, right? And the second checklist item would be, are they audited by auditors that our auditors trust? And the third checklist item would be, how do we feel about their security procedures? And then the fourth checklist would be, how do we feel about their business practices and their reputation? So, if you go through all those, you want an institutional grade exchange, an institutional grade custodian, and the jurisdiction. Companies like Coinbase and Fidelity, NYDIG, they would kind of check the box. We wouldn't trade with an offshore entity just because we need someone that's got the appropriate license in the US. And then there tends to be a pretty detailed process of getting comfortable with their back end operations and controls and accounting procedures and the like. So that's how we do it. And that's truthfully how any American institution, big public institution would do it. They would do it through one of those bigger names. And, if you go to my Bitcoin for Corporations conference, we posted on our website, we interviewed 8 kind of institutional grade Bitcoin vendors, and we talked to Genesis Trading, we talked to Fidelity, we talked to NYDIG, we talked to Coinbase, right? So I would encourage people to look there if they're interested. And so if you want to build a large asset base, there are 2 secrets. One, long time horizon. You buy something to hold it for decades. I think Warren Buffett's held Coca-Cola stock for 40 years, 50 years, maybe. Right? No capital gain if you don't ever sell it. And so long time horizon is one. And then the second is be thoughtful about tax. If you were to buy $1 billion of property in Florida, you'd pay $20 million a year in tax. Okay. It's expensive to carry real estate in Florida. If you're going to do that, maybe you should find another state that doesn't charge you 2% a year, right? Or if with Bitcoin, the beauty of it is, I can choose the jurisdiction where I custody it, right? So it's portable property, and then I can hold it forever. And if you have portable property you can hold forever, that's tax efficient property. At least theoretically, it's a lot more tax efficient than any other idea I have. If you buy a company like Apple's got a headquarters in California and they've got employees, and you're going to get tariffs, you're going to get California state tax, you're going to get employment tax, you're going to get corporate income tax. You see, you have domicile, you have a tax load. So MicroStrategy's strategy is long-term, buy, hold, buy some more, keep buying. But the cryptos don't have that rule. So it's like the tax law encourages you to sell whenever you have a loss.
Yeah.
Right. And that's kind of like, that's a green light for fast money traders to come. And they're like, since they should sell and they know you should sell, then they're going to make you sell so they can buy back cheaper. And so you've got some built-in structural incentives for it to be volatile. Do I think we're in a crypto winter? No, I don't think we're in a crypto winter. I think we're fighting through a lot of macro issues, right? Like people are uncertain about the degree and extent of regulatory intervention and what will happen. They're uncertain about geopolitics, be it either, Russia, China policy on crypto versus, Ukraine and the like. They're uncertain about monetary policy. Like they're like, oh, there's no inflation, so Bitcoin trades down. Oh my, there's massive inflation and the Fed's going to raise interest.
Crazy.
So Bitcoin trades down. And so Core Scientific came public with a multi-$100 million equity raise. Anytime a Bitcoin miner raises money, there's only one thing that's happening there, which is that means that money's being spent either on mining equipment or it's being spent on Bitcoin. But ultimately, it's really being spent on Bitcoin because if they have the capital, that's that much less Bitcoin they're selling. And so this whole crypto winter idea was boom and bust cycles and living through the 4-year halvings. But what happens is once half of the hash power of the network is public, I don't know if you noticed, the Bitcoin Mining Council is like 46% of the hash power of the network now. And most of them are, not all of them, but a lot of them are public. As those companies come public and they buy up the private miners and they issue equity and they issue debt, then the amount of Bitcoin they sell decreases and the stock to flow increases. And the stock to flow eventually goes to infinity. And that means the available supply, each day goes to a trickle, and that creates price pressure. So those dynamics are going to decrease volatility. If banks are able to hold Bitcoin on their balance sheet, like the big banks, they get comfortable, and FDIC guidance would be a critical catalyst there, then you're going to see a big demand. And then if you see companies like Silvergate Bank issued credit lines, if you have FDIC insured banks, they get a green light to do stable coins, a green light to get into crypto lending, then people that own Bitcoin don't have to sell the Bitcoin. If they don't sell the Bitcoin, instead of holding it for 4 years, they hold it for 8 years. If they hold it for 8 years, it's the same as the stock to flow doubling. You see? Yeah. So there are all these dynamics, like even the BlockFi settlement. Well, it's painful on one hand. On the other hand, if you have publicly traded companies, or in this case, they're not public, but if you have licensed companies in the US that are able to raise hundreds of millions or billions of dollars of capital to give you yield on your crypto, then you're going to have a lot more people think I should hold it, not sell it. Maybe I'll buy it, not sell it. And so the key to an asset class maturing is you either need to be able to rent it, like you need to rent your building, or you need to be able to mortgage it. And if you can put a mortgage on a house, you'll buy a house. And if you can rent that warehouse, maybe you'll buy that warehouse and rent it out as an investment property. And so as the entire industry matures, and as people can mortgage things and they can generate yield on things, and as the Bitcoin miners get public and have access to lots of cheap capital, then I think what you see is volatility decreases, the price increases, right? It's a very, it's a positive feedback loop, right? I don't want to give anybody advice in an area. I'm not an expert. I'm not a venture capitalist. I'm not a speculator. I'm not a trader.
Well, I would say you are certainly a Bitcoin expert. If you're not a Bitcoin expert, then I don't know who is. Anybody who's more of a Bitcoin expert than you.
I give you advice on Bitcoin.
I
give you advice on Bitcoin, and my advice on Bitcoin is hodl your Bitcoin.
Yeah, exactly.